Welcome everyone to this fireside chat. My name is Charlie Donovan. I'm a professor of practice at Imperial College London and co-managing director of the Singapore Green Finance Center. And it's my great honor and privilege to have this chat today with Governor Shamsiah of the Central Bank of Malaysia. And we're going to explore some of the issues around green finance, climate change, and the evolving central bank agenda on these critical issues. So Governor Shamsiah, good afternoon and a pleasure to see you.
Good afternoon. Good afternoon. Nice to meet you also.
I suppose the best place to start is an overview. Why is climate change important to the Central Bank of Malaysia, and what is the role of a central bank in addressing this critical global issue?
Climate change to us represents a risk to our collective future. So tackling it and advancing the sustainability agenda demands an immediate, strong, and global response. So some may ask though, why must the financial sector and central banks be part of this? The reality is that climate events have wide-ranging and significant implications, not just on our physical world, but also the economy and the financial system. This affects the mandates of the central banks. While the prospect of a heating planet may seem like a distant risk, a tail event, we are already seeing signs of how it is impacting the world we live in today. The current health crisis also foreshadows what one can expect were large-scale climate-related risk events were to materialize. So in this aspect, let me explain. For Malaysia, for example, a recent example is the drought that we had in 2019, which led to supply disruptions in the palm oil production. This had a visible impact on the growth of our economy that year. A decline in national and international supply of commodities or food products caused by weather-related events can also lead to inflationary pressures. So the cost of not acting can be far-reaching as climate-related events occur more frequently and intensely. They add greater physical and liability risk to our economy. They also expose our financial system to financial risk in terms of asset impairment, rising claims, and liability risk. Our initial estimate suggests that about 12% of the assets held by the Malaysian financial players are in sectors potentially exposed to climate change. And in this respect, we see that there is a deepening awareness by Malaysian financial institutions to treat climate risk similarly to other financial risks that can potentially affect their liquidity, profitability, and balance sheet. So if we do not deal with it adequately, climate change can impair the ability of the financial sector to effectively intermediate funds. And this collectively could lead to a contraction in important financial activities that support the economy. So this is why we believe it is very important for us to act quickly and decisively. Serious action is required to prepare our financial system to become more sustainable and climate resilient. For us, this means adapting our regulatory and supervisory framework to ensure that financial institutions are adequately measuring, mitigating against climate risk, and to build industry capacity to support the transition to a low carbon economy.
Mm-hmm. And you know, this is a topic that over the past few years has really accelerated in its the frequency of discussion. So you know, starting from say 4 years ago, where maybe a couple of central banks began exploring it, certainly the Bank of England amongst some of the early ones, but now really evolving very quickly into a global conversation amongst central bankers. And I wonder if you just highlight for us a little bit some of the activities that are ongoing within BNM, and particularly there's I understand some work around a principles-based taxonomy It'd be, I'm sure, fascinating for people to understand that better.
Okay, let me start by saying that managing climate change is first and foremost a national agenda in Malaysia. We are a signatory to the Paris Agreement, and the Malaysian government has committed to reduce our greenhouse gas emission intensity by 45% by 2030. So we are currently at 33%, and the government believes that we can meet this target. More broadly, Malaysia has also adopted the 2030 Agenda for Sustainable Development and is thus committed to its more sustainable, resilient and inclusive development with the 17 SDGs. So where Bank Negara as a central bank comes in is primarily in our role as the regulator and supervisor of financial institutions. This involves us working with the financial industry to develop and implement strategies to build climate resilience among financial institutions. And like what you said, an important step that we are taking is to develop a taxonomy to facilitate the systematic identification and quantification of climate risk exposures across various activities, be it in fundraising, lending, and investment activities. So this is an important building block for managing climate risk. So I will be happy to talk a bit more about this later if you wish. And the other thing that I want to touch on is on the role of Islamic financial institutions. In my mind, the entire financial sector must respond to the climate challenge. However, Islamic financial institutions have a special role to play. Given their Sharia underpinnings and focus on generating a positive and sustainable impact on the economy, the community and environment, Islamic financial institutions are well positioned to lead and pioneer efforts for others to follow. So the very ethos of Islamic finance incorporates sustainability concerns and will be an important vehicle in advancing the climate agenda. And this is why we have worked with the industry on what we call value-based intermediation, which is a systematic and structured way for Islamic financial institutions to embed environmental and other sustainability factors into their strategy.
So it's a very unique aspect of how Malaysia is interacting with this issue and has a sort of a national context as well as the global context that we're all familiar with. There's also something more I would love to explore with you about that national context, which is that every country has a slightly different way in which it thinks about its central bank and its independence or its ways that it collaborates with other parts of government. So could you tell us just a little bit about how in Malaysia the central bank is working with other government agencies on this agenda?
So in Malaysia last year, we established a joint committee on climate change together with this securities regulator, the Securities Commission, the financial industry, key government agencies, and some institutional investors. So this platform serves to build capacity within the industry and also to identify issues, challenges, and priorities to manage the transition to a low carbon economy. So one important area that the JC3, what we call it, is to improve the disclosure practices, to improve transparency on how climate risk considerations are integrated into the business decisions of financial institutions. So in particular, we are looking to promote the adoption of the recommendations of the TCFD, which is part of the FSB. And the bank is also part of the Malaysian Green Financing Task Force, which is chaired by the Securities Commission to spur private sector financing in the renewable energy sector. So if I may also mention, Charles, that Malaysia's budget that was announced recently aims to position Malaysia as a sustainable financial hub. So this will include Malaysia issuing the first sovereign sustainability bond next year. I would like to mention that we also engage with the relevant ministries, agencies to promote alignment between the government and the financial sector responses to climate risk. So in pursuing this, we seek to help shape and get more clarity on key national policies and to provide perspective on the financial sector. This is important as at the end of the day, everyone needs to have clear, robust and predictable national agenda and regulatory framework for climate. And for the financial sector in particular, this can facilitate the design and offering of appropriate financial products and services. And this in turn will accelerate growth in green and sustainable finance space. So for example, in Malaysia, some banks have rolled out financing facilities to facilitate adoption of renewable energy. So for the economy as a whole, we believe that this is important as we need a regulatory environment such that individuals and businesses are keen to invest in climate transition and green or sustainable project. And this could include just installing solar panels on one's roof, or for a small business to make a leap by adopting clean tech in its entire manufacturing process.
And it's a huge process of scale now, and those sound like the seeds of really constructive and proactive action in Malaysia. So thank you for that. Let me shift gears a little bit, and I want to take the opportunity to ask you a tough question that I get asked quite a bit, because as you know, Imperial College is not just at the forefront of climate science and energy technology, but also has been very deeply involved in the scientific challenges associated with the ongoing pandemic. And a question that gets posed to me, which in turn I would like to pose to you, which is, what can we learn from the pandemic, and what kind of similarities and differences do we see between what's happening in the pandemic and what could happen as climate risks materialize? Be interested in your thoughts on that.
Unfortunately, we are not yet done with the pandemic, but in my mind, the pandemic has plenty of similarities with climate crisis, and likewise, it does offer relevant lessons that we can draw for the climate agenda. Above all, the pandemic brings into sharp focus the balance between safeguarding lives and livelihood. It has brought the world economy to its knees, and what we once knew as normal has been turned on its head. While it will happen more gradually, many expect climate change to have an even bigger impact on the world and the economy. In all likelihood, vaccine will help restore some normalcy in our lives in the next couple of years. But the harm and damage caused by climate change is likely to be irreversible. So at the top of my mind, the pandemic offers at least three important lessons for climate risk. First, the importance of committing to serious and immediate action. The pandemic has taught us that the earlier we act and the more serious our action, the better our chances of beating the crisis. Yes, there will be painful near-term trade-offs to the economy, but in the medium to long term, safeguarding lives and livelihoods are perfectly aligned. So the longer we delay, the harder the fix. So that is why we cannot delay any further the climate risk agenda. Second, to my mind, the importance of what I call collective responsibility. The pandemic highlights the importance of collaboration across different government agencies, various businesses, and also across all of society, and also across borders. So that is why the financial sector must step up and play its part in the climate agenda. In the past, as a mobilizer of capital, The financial sector has played important roles in helping address various global challenges. This will include building infrastructure and helping countries develop, or also in helping fund important scientific and technological advancements, or in combating crime and terrorism financing. So this is no different. And thirdly, the pandemic has brought to light the importance of accelerating the use of technology to overcome real-world challenges, including in the area of finance. For example, contactless and electronic payments have helped people and businesses continue conducting commerce in a safe manner during the pandemic. In Malaysia, we saw volumes of transaction increasing by more than 60% for internet and mobile banking, and more than 100%, if not mistaken, is around 170% for e-wallet just between the first 9 months of this year. So this is one example of how technology has helped disrupt payments and finance to address the pandemic. So we also need to see similar innovations and advances like this in the case of climate and sustainability agenda. And this is where I believe fintech comes in to help make the financial sector make a leap to advance the climate and sustainability agenda.
You've outlined a really a broad and very deep agenda around trying to tackle climate change as an issue. And in business, we always try to look at what could be the source of failure. How can we anticipate what would be, what would upend us from achieving these goals?
So from a global standpoint, there could be some friction between developed and developing economies. And I think we can draw interesting parallels between the climate change and the sustainability agenda with the globalization movement. There has to be a win-win situation for all. There needs to be mutual recognition and understanding on the different paths that each country faces and may choose to take. In this context, a one-size-fits-all approach does not work. For developing countries, managing transition risk is critical. For example, a clean energy transition requires more delicate solutions for countries that are dependent on the oil and gas sector. So in the context of Malaysia, our approach is to facilitate our industries to achieve the national aspiration for the climate agenda, and at the same time nurture them to strive for higher goals and even become global examples. And I think for Malaysia, this is a reasonable approach. In fact, we have had similar experience with developing a complete Islamic finance ecosystem from the ground up. So Islamic finance now has a complete coverage of banking, capital market, insurance, and ancillary services. So the ingredients for success are similar. Strong government commitment, we need supporting laws and regulations and policies, education is important, and public awareness. So on this point, I just want to highlight that while our goal at the start in our Islamic finance journey was to ensure that our financial system better meet the religious needs of Malaysia's Muslim population, we are now focused on ensuring that the full promise and potential of Islamic finance is realized. So in particular, to realize its potential to create a more positive impact on the community and the environment, as I mentioned earlier. So it is no surprise then that the work on climate risk in Malaysia is heavily related to work done in the Islamic finance space. The lessons and experience makes me optimistic that we will be able to address the challenges and develop climate resilience. So, I mean, bringing this back to what this conference is all about. So the financial industry, including the fintech community, can be a positive agent for change to advance the climate agenda.
And it's a very optimistic vision that you have shared, but I think that's one that's based in a lot of realism too. So I really appreciate you taking the time to chat with me about this, and wish you and your colleagues tremendous good fortune as you move forward with this agenda. And I thank you. It's been an honor to speak with you, and hopefully we'll do so again soon.
All right. Thank you, Charles. Thank you.